as we listen to George Strait as we lead into week 9 of Accounting 203. George Strait, some people may argue, Garth Brooks, George Strait, the greatest country western singer of all time. Thank you very much. All right, week number 9, and welcome everybody. Our final official mandatory class for our term. We will have a class next week, which will be strictly a review if anyone needs it. We're going to talk about the Breakeven Point, chapter 21 tonight, which there's a couple of questions on your examination to that extent. And we'll be reviewing any questions you may have about these last few weeks of the class, your case, your project paper, anything in that regard as we wind things down. Final examination has been posted to Blackboard. It is available for downloading and to begin your work. It is due Sunday, August 16th. You have your case paper due next week. All the evaluations, if you complete an evaluation, is due August 18th, Tuesday. And I moved the grades posting date up a couple days. If you do the course evaluations and complete your work, all grades will be posted Wednesday, August 19th to Blackboard. If you decide not to do your course evaluation, which is your right and no problems, your grades will be posted in about 2 weeks after your Sunday the 16th by the registrar. Okay, let's take a look at something here. There's a nice little summary cheat sheet in your textbook, and I want to go over that. It's in your textbook on page 797, I believe, way at the end as we wrap up this text. It gives some definitions that you should be aware of heading into this last week. Remember, and just to review your memory, our class has been split into 2 types of accounting. The first half of the class, accumulated by the midterm, was on financial accounting, the recording of business transactions in what is called the accounting cycle, leading up to the closing of the books and moving to a new accounting period with the financial statements signaling the end of that accounting period with the information of net income, owner's equity, and balance sheet, assets, liabilities, equity. Then the second half of the class, we've been concentrating on 2 things: accounting controls, bank reconciliations of the cash account, properly recording receivables as they change throughout the life of the receivable, write-offs, allowance for doubtful accounts. And then finally, we did some work on liabilities, changing an accounts payable into a note due, taking it from a short-term liability into a little bit more longer-term liability. And after we did that, then we concentrated on no longer controls, but managerial accounting. And that's been our topic for the last couple of weeks, managerial accounting. Recognizing what the accounting data can give us in relation to costs, in relation to period or product cost, in relation to fixed or variable cost, in relation to manufacturing costs, and selling and general and administrative expenses. How to determine between the 2 and what that information tells you about the business, what it tells management about the business. This is finalized tonight by what is called the break-even analysis. At what point does our company, how many units do we have to sell to break even, to cover all our expenses? And we went into quite a little bit of discussion about that a little bit last week, where we, excuse me, where we used a break-even analysis to tell us, oh, geez, I sold 10,000 units this week. That means all my costs are covered. Geez, I sold 9,000 units this week. I lost money. Geez, I sold 11,000 units this week. Oh, I made a profit. I didn't need financial statements from the financial accountants to tell me that, because I knew my selling price, my variable costs, and my fixed costs, and I can determine that. It's called the break-even analysis. The textbook calls it cost volume analysis. Now I'm going to stop right here right now and say one thing, because it's week 9 and I can get away with saying this, because I've kind of done my job throughout these 9 weeks. I only see one student showing me their face this evening. First of all, it's not very professional as a student to not show your face. I understand that maybe you're a little tired, your computer setup is not the best and you don't want to show it. I understand that. But at the same time, the only time I have seen many of your faces this term is when I had my professor meetings with you. So it'd be a nice gesture, and this is not for a grade or anything else, but it'd be a nice gesture to your professor to turn on, thank you, Jessica Blanca, to turn on your camera so I can see you this last hour or so of the semester, of the term. Thank you. I appreciate that. I really do. It gives me a little feedback in some minor way that I am talking to a real person and not some dark dungeon cavern of the internet. So I appreciate that. So thank you. Again, I won't be mad if you don't turn on your camera. But remember, I record this and I can go back through it again and see who did not turn on their camera. I'm just teasing. I won't do that, stuff like that. Okay, thank you. Thank you. I appreciate it. I think one of my rules in the next fall semester and term classes is, if you don't have a legitimate excuse, turn on your camera. If you don't have a legitimate excuse, no more fake backgrounds. But that's not a rule for this summer, so don't worry about it. But I think I might be leaning to that direction. So if any of you are thinking about taking business finance from me next September, you might want to keep that in mind. It's not going to be a rule for a grade. It's just going to be a rule that I will harp on throughout the term. Okay, let's get back to work. Sorry about that. I just had to vent on that a little bit just to get it off my chest. Hold it. Nostrovia. That's good coffee. All right. So as I was saying, managerial accounting is a way as a manager. So if Jan Lee was a manager of a department, she doesn't need the financial accountants to tell her whether her department made money. She can just determine the break-even point of her department. Hey, we shipped 500 units this month. We made a profit. So that's an important thing as a manager. That's why they call it managerial. Cynthia, you don't have to explain anything to me about your camera. Don't worry about it. I will just never speak to you again. No, Cynthia, do not worry about that, please. Sometimes students don't understand my sense of humor. Usually by week 9, they finally figure it out. But still, some get a little testy. So I apologize. Cynthia, don't worry about it. So I'm back to Jan Lee, because I see your pretty face tonight, Jan Lee. Thank you. So let's say Jan Lee is running a department, and she has to wait maybe till the middle of the month to say whether she made a profit or not. Well, she can determine right at the beginning of the month, on the very first day of the next month, whether she made a profit or not, because she knew how many units she sold, because she knows her break-even point. That's a nice thing to have as a manager. All right? I don't think I've told you much about my business before I became a retired, angry old man. But my business before that was I was an investment banker. And I knew that every month of my business, if I billed out 1,200 billable hours to my customers, 1,200 billable hours, I knew all my expenses were covered. And my contribution margin was $600. So if I billed out 1,200 hours, all my costs were covered. If I billed out 1,201 hours, I made $600. My contribution margin becomes my profit margin because I've covered all my expenses. If I billed out 1,202 hours, I make $1,200 profit. I didn't have to wait 2 weeks for my bean counters to give me all that data. I knew when my office manager on the very first day of the next month brought in my billable hours for the month, I knew whether I made money or not. That was a nice thing for me to know right off bat. So usually my office manager hid from me for a couple hours on that first day of the next month, because if she knew that 1,200 hours was the magic number, and if we billed out only 1,000 hours, she knew the Haas man was not going to be very happy. But if the billable hours were 1,400 hours, she then knew that I'd be in a very good mood, and she brought those in bright and early in the morning. But that's an important thing to know. And how did we determine that? Well, we know the definition of our fixed cost. Fixed costs are costs that do not change in relationship to the volume or the sell amount that you're selling. They don't change. Whereas variable costs change proportionally with volume in total dollars. The more units you sell and produce, the higher your variable costs. The more units you sell and produce, fixed costs do not change whatsoever. Now, the book talks a little bit about mixed costs, costs that are both fixed and variable. What's a definition of a fixed cost? Your utility bill. Your utility bill. If you ever look at your electric bill or your gas bill, you have a fixed charge every month for all the nonsense the utility company charges you. And then they also charge you based on your usage, how much gas and electricity you use. So technically, utility costs are mixed costs. They're a combination of fixed and variable. If you didn't come into the office the whole month, you're still going to have some cost of utilities. It's those fixed costs of that bill that they'll charge you. But for us, in our class, you don't have to worry about mixed costs. Just be concerned with fixed and variable. Their definition. Very important numbers. And all leads to this little diagram here. Contribution margin. The contribution margin is equal to what you sell your product for, the selling price per unit, minus the variable cost per unit. That's the contribution margin. The contribution margin ratio is the contribution margin per unit, this number here, over the selling price per unit. Let's say my selling price is $50 and my variable cost per unit is $30. That means I have a contribution margin of $20 a unit. That $20 a unit has to cover my fixed cost. I have to sell enough units at $50 minus the variable cost per unit, that's $20. I have to sell how many units to cover those fixed costs to get to cover my fixed costs at $20 contribution margin. The contribution margin ratio is the relationship of the $20 to the $50. What percent is 20 over 50. That's my contribution margin ratio. And then I can produce a contribution margin income statement. My sales minus my variable costs equals my contribution margin minus my fixed costs equals my net income pre-taxed. That's called a contribution margin income statement. I would pay a close attention to that little doodad right there, because this is where I'll freak some students out in the examination that's been posted already to Blackboard. Please produce a contribution margin income statement for this data. What the hell is he talking about? I thought we were always using the income statement, revenue minus expenses. No, in managerial accounting, it's called a contribution margin income statement. It shows the relationship of sales, variable costs, and fixed costs. With this information, we can determine our break-even point. Fixed costs, total fixed cost dollars, divided by that contribution margin ratio. We're going to look at a problem along those lines this evening. That's the break-even point in units. How many units do I have to sell to make zero profit, where all my expenses are covered? The break-even point in dollars is the fixed cost divided by that contribution margin ratio. If I do that, I can get my break-even point in dollars. And again, we're going to look at a problem about that in just a minute. But again, as I was using the examples of Jan Lee and myself, I don't need financial accounting financial statements, even though they are important. I don't need them to determine whether I'm making money or not. The other day, I went into my dry cleaners here in Claremont. They haven't been seeing much of me because I haven't wore, this is a true story, I haven't wore a pair of pants in 22 weeks. How about that one? I'm wearing shorts now. I haven't wore a pair of pants in 22 weeks. I wear Tommy Bahama shirts. I don't wear dress shirts. I don't wear ties. I haven't worn a suit. The next time I probably wear a suit is I'll be dead and they're going to put me in the suit. I don't wear those clothes anymore, so I don't go to my dry cleaners very often. But I did go this week because I had to drop something off for my wife. So I go into my dry cleaners, and I've been going to the same dry cleaners for 35 years. So I kind of know them. By the way, if any of you like to bet on any gambling, go to this dry cleaners. Go in the back door, tell them Rick Hassey sent you, and they'll play some bets for you. The guy's a bookie on the side. I can't believe I just told you that, but whatever. Okay, so I went in my dry cleaners and I said, hey, Pam, how you doing? Oh, not good. We're not making any money. Nobody has any dry cleaning. Rick, you don't come in here anymore. No college students are in Claremont anymore. They don't come in. Even some of the police officers and the fire emergency people don't come in anymore because they found cheaper clothing, so they don't have that expensive clothing that needs dry cleaning all the time. I go, well, are you really losing money? She goes, yeah. You know why? Because we're not making our break-even point. Oh, I'm going to tell this to my class. I said, what is your break-even point in your dry cleaning business? If we process a unit in the dry cleaning business is a shirt, pair of pants, a dress, a blanket, whatever. If we process 750 units a month, we break even. 750 units, that's 750 shirts, blankets, pants. Yeah. Boy, that's a lot. Yeah. We have expenses. Now, we have not made money the last 2 months. But before that, we were making our break-even point. But this month and last month, we're not making it. I go, what does it look like for the fall? I don't know. So they know right off the bat how they're doing because they know their break-even point, units in the dry cleaning business. Let's take a look at a problem that practices this. It's going to take me a minute to bring it up. Here it comes. Okay, I'm on page 806 of your text, problem 21.3a. And it asks you to determine the break-even point in sales, units, and in dollars, just like we were talking about. And it asks you to prepare a contribution margin income statement showing the sales, the variable costs, etc. So let's see if we can do this, all right? You know, I'm spending a lot of time on this. You got to know it's on the horizon. Okay. So first of all, let's take a look at this company. It's called Breakeven Company, manufactures and markets rope products. Boy, I could make a wisecrack about that one. Management is considering the future product XT, a special rope for hand gliding that has not been as profitable as planned. Since product XT is manufactured and marketed independently from their other products, its total cost can be precisely measured. Next year, we plan on selling 100 yards of XT rope at $200 a unit. There's our selling price, $200. Our forecasted variable costs, our fixed costs are $270,000, and our forecasted variable costs are $140 a unit rope. $200 selling price, $140 variable cost, and $270,000 of fixed costs. Now, before I go any further, an example of a variable cost for a rope manufacturing company would be what type of an expense? Brian Rodriguez, come on down. Give me an example of a variable cost for a company that makes rope.
Any cost? So
any cost.
Fixed costs would be utilities.
All right, I'll go with that. We'll call that overhead. Utilities, manufacturing product overhead. Now, I would have said labor hours, rope material, stuff like that. But that's, Brian, you're on the edge of that one. That's a good one. Okay, utilities is an example of a variable cost. Aubrey, what is an example of a fixed cost for this rope company? What would be an example of a fixed cost?
I was going to say, well, it wouldn't be rent, because can't rent go up? Like a building?
Yeah, but is rent directly associated with how many ropes you're producing?
No. So it would be...
So rent isn't a fixed, rent is a fixed cost.
Oh, it is? Okay, good.
Yeah. Just rent goes up, insurance goes up, depreciation changes, but it has nothing to do how much rope you're producing.
Right. So
make sense?
Gotcha. Yes.
Very good. Okay. So as Aubrey said, what'd you say again?
Rent. Building rent.
Okay.
Mm-hmm.
Rent is an example of the $270,000 fixed cost. And as Brian said, utilities is an example of the variable cost. The more rope you produce, your utility bill will probably go up. Good job, Brian. So these are designations that you don't have to worry about for the exam, but they're designations of what makes up those costs. So let's keep this on the horizon and bring up our old friendly whiteboard. Here we go. So let's determine our break-even point in sales and in units, in dollars and in units. Okay? What is our break-even? And the break-even is where our profits or our net income is zero. That's our break-even. okay? So remember in this problem, they told us our selling price, our sales price per unit is equal to $200. Our variable cost, a utility expense per unit equals $140. And our fixed costs, our rent, for an example, equals $270,000. First of all, what is our contribution margin? What is the geez, Mr. Hassey, contribution margin? Remember, the contribution margin is the selling price per unit minus the variable cost per unit. So our contribution margin is $60 per unit. What is our contribution margin ratio? It's the relationship of, remember what it said, the contribution margin ratio is the relationship of fixed costs, is the relationship of, who can tell me? The contribution margin as a percent of sales, which is the contribution margin of $60. I had to look at my notes there, I forgot it. Contribution margin is $60 a unit divided by $200 a unit. That's our contribution margin ratio. In other words, that equals 60 divided by 200, that equals 30%. That's our contribution margin ratio, 30%. So knowing that, what is our contribution margin in units? And what is our contribution, let's take that back in, I'll get you all confused. What is our break-even point in units? Thank you. I need a vacation. Our break-even point in units. And what is our break-even point in sales? Dollars. I would like all of you, looking at what we just talked about from our chapter 21 on that cheat sheet, what is the break-even point in units and what is the break-even point in sales? Take a couple of moments. If you have a pad of paper or a calculator handy, if you don't worry about it. That's not a big deal. But if you have chance, could you do the arithmetic to tell me what is this Prevene manufacturing company that's making a rope? What is their contribution margin is $60 a unit. Their contribution margin ratio is 30%. What is their break-even point in units and their break-even point in sales dollars? Take a couple moments and see if you can determine that. Jan Lee, you are too good. Here comes another chat.
Is this going to be in our final, sir?
It is, Brian. Now he takes the notes. Jan Lee, you are the man, or should I say the woman? Okay, let's see if we did this. Remember, the break-even point in units is the fixed cost, $270,000, divided by the contribution margin ratio, which we determined as 60 bucks. I do the math. 270,000 divided by 60. Jan Lee, what do I get? Turn on the mic.
Okay, 4,500 units.
4,500 units. Very good. That's my break-even point in units. My break-even point in dollars is the fixed cost, $270,000, divided by my contribution margin ratio, 30%. And that equals, Jan Lee?
$900,000.
$900,000. So I know, and another way to check that is take 4,500 units and multiply it by $200, the selling price. You get 900,000. That's another way to making sure you did it correctly. Take the units of break even and multiply it times your selling price, and you should get 900,000. So this company knows by producing a rope, if they sell 4,500 units of this rope, all their expenses are covered. And in dollars, that's $900,000. Well, how can I verify that? If I want to put that in a little report, I put together what is called a contribution margin income statement. And this is a great managerial tool for managers to get this information to their employees. The contribution margin income statement is sales, which in this case is 4,500 units, which was our break-even point, times $200 a unit. And we get a total sales, as we determined, of $900,000. Our variable cost are 4,500 units, the number of units we're producing and selling, times $140 a unit. That's our variable cost rate. That gives us $630,000. That gives us a contribution margin of $270,000. 630,000 subtracted from 900,000 sales, $270,000. Then we have fixed costs, which are given in the problem at $270,000. And we get our net income in this contribution margin income statement of 0. Fini. We now have shown, by calculating it out through our little formulas and showing it in a quick and dirty income statement, yeah, Miss Jan Lee's right, Mr. Hassey's right, Michelle's right. 900,000 sales, variable cost of 630,000, a contribution of $270,000, fixed cost of 270, subtract that, 0. And here's an interesting thing. If we sell 4,501 units, our profit becomes $60. Our contribution margin becomes the profit margin after the break-even point. I would write that down. The contribution margin becomes the profit margin after fixed costs are covered. So if I sell 4,501 units, I'm going to be making 60 bucks because my fixed costs have now been all covered. If I'm going to sell 4,502 units, I'm going to be making a profit of $120. and so on.
Can you repeat that one more time? The contribution margin becomes the profit margin when the fixed costs are covered?
Exactly right. The contribution margin becomes the profit margin once the break-even point is achieved, because now you know your fixed costs have been paid for. This, ladies and gentlemen, you're going to have a question on your exam, and I mentioned this last week in our final examination review outline. What is the difference between financial accounting and managerial accounting? Here's one example. The contribution margin statement, income statement, is managerial accounting. The real income statement from closing the books accounting cycle is financial accounting. Note the difference. In managerial accounting, I see no utility expense, rent expense, none of that. It's all grouped together by either variable expenses and fixed expenses. Managerial accounting, financial accounting. That's a big difference. Managerial accounting tells you different things. And there's a little essay question on the examination asking you to give examples of the difference between financial and managerial accounting. That's one. You got to give more than one, but that's one. Problem 21.3a in your textbook. A good review problem. I will post this little whiteboard to our week number 9 file folder when we're done. But this is a good reference point for those questions having to do with when does my company make money? Now, you're going to be up the creek if you can't determine what the variable costs and the fixed costs are. Well, if you're in business and you can't determine variable and fixed costs, then you're not going to be in business much longer. That's the job of the managerial accountant. In some businesses, they call them the cost accountants. In some businesses, they call them the internal auditors. In some businesses, they call them weird. It depends on the business.
I have a question.
Blanca, question.
Real quick. On how did you determine the contribution margin ratio?
I took the contribution margin in dollars, which is $200 minus 140 is 60 bucks.
Mm-hmm.
And I took $60 and I divided it by the selling price of $200. So if you take $60 divided by 200, $60 is 30% contribution margin. In other words, your contribution margin is 30% of your selling price. So in order, if I want to know how much dollars it takes to cover my fixed costs, I can determine those dollars by taking the fixed costs and dividing it by that 30%. $270,000 is 30% of $900,000. If I sell $900,000 of product, my fixed costs are fini, covered. Okay?
Got it.
Good. That's a little confusing. I understand. When I was 21 years old looking at this for the first time, I go, what? Huh? Ooh, what? Drove me nuts. And it's a little bit different concept. But that's the difference between managerial accounting and financial accounting. Notice there's no journal entries going on here. There's no closing the books. There's no fancy dance stuff like that. All there is determining and interpreting the numbers. What are variable costs? What are fixed costs? And using that information and your selling price, you can find managerial data.
So what problem was this again for?
21.3a. It's on your agenda that I distributed with my introduction video. It's on your agenda in Blackboard. And it was on the agenda that I posted prior to our discussions this evening. 21.3a, Brian.
Thank you.
Okay, got it? Just think, one more week of accounting, and then you might never ever see it again. But I have a clue for you. You take business finance, 330, you'll see accounting again. You just don't have to calculate it. You'll see it though, and you have to know what it means. Contribution margin is used a lot in finance. Big time. Trust me. Now let's take just a private poll here as we have a break in the action. How many people raise their hands are thinking about taking Mr. Hassey online Business 330? Don't everybody raise their hand at once. That's a shame. You guys are missing out on a wonderful...
The cohort is told what we're going to take, so we don't get a choice.
No kidding. What are you taking next term? Because the usual flow is accounting, then finance.
Business 347.
What the hell is that?
Legal environment of business, principle of marketing, learning through community service. Business 347, Business 360, and LVE 305.
I'm not going to say anything.
You don't have to. We all feel it.
Yeah.
Because some point in time in the future, you're going to have to take 330, and the longer you wait to get to there, it'll make, especially if you have a ding-dong professor, I shouldn't say that, sorry. It's going to make it very difficult. But what can I say? You guys will be fine. Because here's a good thing. You can always go back. All this stuff is going to be available on Blackboard for you until 2023. You can go back and refer to it anytime you want for the next 3 years.
That's good to know.
So you can just click on it and you can go back and say, oh, remember, geez, all of a sudden my finance professor is talking about break-even point. What the hell is that again? Hassey, accounting, week 9. Whew. Thank you.
Does that include your videos?
Everything. YouTube will be around at my funeral. So you can play that at my funeral and say, you know, this guy was wacko. Thank God he's gone now. Get him out of here. But yes, everything will be available forever. And you can refer that. I've had students go on to graduate school and refer to this stuff. Because, you know, it's been a while. I know you guys take a lot of time between classes because you all work. You can't take 3 or 4 classes every term. That's crazy, especially if you work.
Yeah.
So you have to wait on this. So that's understandable. And also, and I shouldn't beat up the university about that, they go by the availability of their professors as well, okay? If they have professors available in the fall to teach certain classes, well, they have to get you into those classes because that's the only time they're available. So there's nothing sinister going on here. It's just the way that the schedule works out. But not to say anything, but I'm teaching this class at all the other regional campuses, and I don't want to say anything, but I'm just saying. Okay.
Can we email you if we have questions and you're not our professor?
All right, it's $1 a word.
Okay.
So if your email is 20 words, that's $20. I do take Venmo, PayPal. All that. No, yes, of course, Aubrey. Give me a break. I'll talk more about this later on tonight. But you can call on me anytime and say, Mr. Hassey, I'm working on this. What's going on? All right. So that's no problem. And no, it's not $1 a word. You'll get the discount. It's 20 cents a word. No, that's a joke too. It's no cost. Brian, will you smile? It's not that bad. All right. You're almost done with this class. You know, you should be feeling good about yourself. You've done a good job. You've gotten this far. You're going to pass, so don't worry about it. All right. You are going to pass, aren't you, Brian?
Mm-hmm.
Thumbs up.
I hope so. I hope so.
Yeah, all right, there you go. Okay. All right. All right, I'm going to save this, and I'll put it to Blackboard. Adios, whiteboard. This is our last whiteboard of the class, so get the hell out of here. Okay. All right, now. Ooh, it's almost our break time. Let me do this.
Well, aren't we all getting an A on our project anyway? So
if you write intelligently, yes.
of course.
Professor Hesse?
Professor, the project paper is a pretty good A for all of you, unless you just totally mess up and give me some work that looks like whatever did it. I mean, no. I mean, A is usually 9 times out of 10 you're going to get an A in that project paper. As long as you did your work, you're going to get it. Michelle, question.
Do you know what you're teaching winter of 2021 yet?
I do not.
Okay.
I'm sorry to say. And also, I gotta be honest with you guys. I have just, can I tell you this? The hell with them. I have just signed a contract with the University of Laverne through the next 2 years. Because of that contract, I will be teaching more courses at the Laverne campus. But they are going to allocate me a certain number of courses that I can teach at up in your area, Vandenberg and Hancock, or in Orange County, or in Ventura, whatever. But I won't have as many options available to me teaching in the regional campus as I've had before this. I know why they're doing this. First of all, they want to lock me in at a specific rate because I could probably negotiate for a little bit more if I wanted to. And secondly, they want me more involved with the traditional students, which I disagree with. But if they're going to offer me that kind of money, then I'm going to say, okay, fine. But just be aware of in the future, if you see Hasse's name, oh geez, he's teaching this course, and I usually teach a lot for regional campuses in winter, Michelle. But because of the change in my contract a little bit, I'm not saying that I'm better than anybody. It's not. It's just it's just business. It has nothing to do with anything else. And so, but courses for me might be a little bit more difficult. But here's how you get around that. You go to your academic advisor when they say, oh, it's time, Michelle, for you to take Business 330. And then you say, well, you know what? I'd like to have Professor Hasse. Where is he teaching? Now, if this is in the winter and spring next year, Michelle, we'll be back in the classroom. I assure you. If we're not back in the classroom next winter or spring, University of Laverne is going to go adios amigos. So we will be in the classroom.
Because if we do have to take it, it will be winter 2021.
Okay, so what you should do is you say, can we have Mr. Hasse come up here and teach the class during that particular time period? If you tell your academic advisors that, they will go to your campus director, and the campus director will go to my boss, the dean of the college, and say, students would like to have Professor Hasse. Is that a problem? Let's lock that in. So that's how it works. Okay. Now, again, I'm just a regular Joe Schmo, and there's plenty other worthwhile people to teach that class, but you have you're a student, you pay the bill, you have preferences, you tell them your preferences, Michelle, and they'll do their best to do that. Okay?
Thank you.
Lisa, you have a question?
You already answered it.
Oh, okay. Thank you. Who's Lisa? Oh, Lisa Barlow. Sorry, Lisa.
That's okay. You answered everything.
All right. Thank you, Lisa. All right.
That was Lisa that asked the question.
Oh, I thought it was Michelle.
No.
I'm sorry. You guys' voices are similar. I'm sorry.
Oh, no, you're good.
Also, I got a fan going on in here, and I can't hear very well either. So, all right. Well, it's almost 7 o'clock. Let's take a little break. And when we come back in about 10 minutes, let's talk about the duties that you all have to do over the next couple weeks. Cassandra, looks like somebody's coming to your door to drop off a package. I just saw them in the window. So be sure you know who that person is. Let's take a break, and I'll see you all in about 10 minutes after the hour. And I'll also post a little poll for you to do, which is kind of along the discussion that we just had about classes, and see if you can answer that poll. And we'll talk about that when you come back as well. So see you at 10 minutes after the hour. Bye. Okay, we're back. We have a poll question tonight, and it's kind of like the subject we talked about before on Lisa Barlow's question. Our question is, online remote class is not for me, okay, but not for me, great, I wish every class was online, okay, depends on the professor, no comment. So again, this is just a fun little thing. It means nothing. I don't pass this information on to anybody. It's just a fun little thing to do to determine our feelings in class. And so let's take a look at our results. Well, the great majority of our class looked like okay, depends on the professor, which is probably the usual answer I've received from many of my classes this week when I give this quote poll question. It's about that. I've also had a lot of okay, but not for me in regards to that. But at the same time, okay, but depends on the professor seems to be the majority of the thinking with a lot of our students. But thank you for doing that. It's a different thing, and I think, as I just said a few minutes earlier, we're going to be online and remote through the fall, and I think every effort under the sun is going to be done to make sure we get back in the classroom in the wintertime in the second week of January. I think that's when the term starts. But the prevailing or the bottom line is, if you're not going to be safe in the classroom, then we're not going to do it. And it has nothing to do with the professor, has nothing to do with anything else but the safety of the student. If I had children with me, like Jessica and her home, if I had family to support and to watch over, and I wouldn't ask you to put you in a situation where you would feel in danger from getting the virus. And so that's the prevailing thinking. That's why we decided to go in the fall again back to online. It's just too dangerous, too many ifs, ands, and buts. But hopefully we can get this straightened out safely for the winter term, and that'll be good. So that's the plan. And it's not very good for students who are finishing out their education. I'm teaching a class now this summer that it's their last class, and then they're going to be finished. That's not a much of a fun way of ending your studies, but we have to do that, and so that's the way it is, and it's just for your safety. So that's the bottom line. Okay.
Professor Hasse?
Yes.
In regards to the poll as well, and I think the majority may agree with us, because we've talked about it in other classes when we were in actual class. The reason why we chose this cohort and going through this was because it was not online. Right. And I totally get it, respect that, and we need to do what we need to do. Mm-hmm. However, I was borderline and no, not for me. I voted the other way, depends on the professor, because it does make a huge difference, at least for me, where a professor invests the time in actually having us learn instead of testing us to fail. Mm-hmm. If you know what I'm getting at.
I do know what you mean. I do what you mean. I mean, and that's a good feedback.
Yeah. So if you could also translate that or pass that on to them, in regards to how you teach, your way of teaching, what tools you use. I've never seen anything remotely close to what you've provided us today or this term. Okay. At all. I have a second class. I probably have a few little sections there that I have a choice, and we've only met with that professor one time through WebEx or something like that. And he's yet to grade all of our quizzes and stuff like that. Wow. Well, and the bad thing about that, the answer to your question about the poll, Blanca, is it's okay, but it depends on the professor. When you sign up for a class, like a lot of you never heard of me before when you signed up for this class, and that's the risk, that's the gamble. If you don't know
the quality of the professor you're getting when you don't know who it is. Now you know a little bit about me, and if you see my name on a Business 330 class down the road, you'll say, oh, at least I know what Hassie's all about. Maybe I don't care for him, but at least I know how he does it. And so, and every class I teach is basically the same way online, like this one. You know, naturally, the discipline is a little bit different depending on the class, but it's exactly the same way. Same stuff, same material, same videos, the same thing. So yes, you're right, Blanca, and I understand that. And that was, and I had some discussions with your campus director before this, over the wintertime, before when we were setting up this class for the summer. I said, you know, because I was planning on coming up there and teach. I was making in my schedule to come up to Hancock and teach at the Vandenberg site or wherever I was going to teach up there. And that was all arranged. We were ready to go. It was all set. But then with the pandemic and with the changing, you know, conditions, we were thrown for a loop. Now, fortunately, I have a lot of experience with online, as I've told you. So it was, for me, fairly seamless. But for you guys, it's not seamless. This is not your cup of tea. You're signing up for a business degree where you have the professor who hopefully knows what they're doing, is in front of you, can answer questions and do basically what we're doing in this class, but more right in front of you. And I understand that. And that's how we originally were going to teach this class. That's how I was setting it up. I made arrangements in my schedule to drive up there the day before, blah, 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 teach the class and all that sort of thing. Play a little golf, do a little wine tasting. Okay, nothing wrong with that. All right, but it didn't work out that way, and that's to your loss. But I've tried my damnedest to try to make it as much as possible, as somewhat that I'm coming up to your campus. And I know that doesn't sit with everybody, and I understand that. But at the same time, we've tried to do it our best. And again, I take this into consideration in my grading as well. I do. I play that into my grading of your work, of being in a different environment to learn. I do take that into my grading. So, well, speaking of what you just said, Blanca, and thank you for your feedback, is that, you know, this week in week number 9, if you go to week number 9, and here it is right here, I have a little section here called course evaluations. And this is where you tell the university, online is nice, but it's not for me. Online is good, but if I didn't have Professor Hassie, forget it. Or Professor Hassie was a jerk, forget it. Whatever. This is where you make those comments, because I trust me, I don't get the feedback from this until October after this class. It takes them that long to get it to me. And when I see the report, nobody's name's on it. It's all anonymous, means absolutely nothing in regards to the students. It's just information and data. But this information is read by President Lieberman. Trust me. This information is read by the dean of the college. This information is read by your campus director. This information is especially read by me. So I urge you to fill out the course evaluation. This is where you can give feedback to make your program better. And that's important. You know, you deserve the best possible value you can get. And if you're not getting that, or if you are getting that, you should tell somebody. And that's the University of Laverne, okay? Don't tell your academic advisor, but I'm going to be honest with you, they only want to hear good news. If it's bad news, it won't go very far. All right. So, and I'm being honest with you, this is the vehicle by which you can communicate your feelings about the class. So if you notice, it says on this, all work is to be posted by Sunday the 16th. Okay. All work is to be posted by Sunday the 16th. I will be posting the grades on Wednesday the 19th. So you can go to your Blackboard by Wednesday evening on the 19th, and you'll see your course grade for this class. You'll be all done. It'll be official. If you decide and not do the course evaluation, which is your right, and it's fine. I know a lot of students don't want to be bothered. That's fine. Then you'll just have to wait for your course grade until about 10 days to 2 weeks after the 16th of August, when the registrar will post your grade. See, I'm going to send my grades on the 19th to the registrar. It'll take them about 10 days to get all that cleaned up and posted. But you can get it immediately through the Blackboard of what's your grade. Now, I know that's important for a lot of you because some of you get reimbursed by your employers. Some of you want to know your grade average about determining what courses and how many courses and what's your program going forward. That's important. So that's why it's important to get these grades to you as soon as possible. And that's what we're going to try to do. And that's what we will do. That's my job. I'm not getting paid $3.50 an hour to screw around and not get the grades out. So you can anticipate that. So that's number one, course evaluations. Number two, I might have already told you guys this last week. I get, for every class I teach at the University of Laverne, going back to 1982. Good God, some of you probably weren't even born then. 1982. I keep a record of every student I've ever taught. The class they took, the grade they received, any notes that I might put in about the student. I keep track of that. And here's why I keep track of it. Not because I'm a stalker, but I keep track of it because I expect you all to use me as part of your network going forward with your business career, with your academic career. As Aubrey said a little bit earlier, Mr. Hassey, after this class, and we're taking another class, if I have a question, can I ask you a question? Yes, you can. Mr. Hassey, if I get my business degree and I'm thinking about going on to MBA school or graduate school, can I get your opinions on that? Be happy to. Mr. Hassey, as soon as I get my business degree, I'm going to start looking for a better job. Can I have a letter of recommendation that I can show an employer from you, my professor, about the class I took and how I did in that class? No problem. Mr. Hassey, 10 years from today, I'll be drooling in my mouth, but I'll still be around. But 10 years from today, you're thinking about starting a business. And you're applying to the Small Business Administration to get a loan or a business plan. Oh, I remember 10 years ago, Professor Hassey told me that if I ever have any questions or have any issues, I can write him an email. And I've done business plans for a living. I've borrowed money from the Small Business Administration. I can give you my advice and expertise on that. So here's what I'm saying. I have taught at USC, UCLA, Pepperdine, UC Riverside. Did I say UCLA? I'm missing one. The Claremont Colleges, Pomona College, Claremont McKenna College. I have taught at all those schools over the last 15, 20 years.
Nice.
Why I keep coming back and teaching at Laverne is surely not for the money. But the reason I keep coming back to Laverne is because I enjoy the students who attend this university. I know that sounds like a bunch of BS, but it's honest God truth. And I enjoy serving them many years after I am now no longer teaching them as part of their business network. A lot of my students participate in LinkedIn, which is a business network. You should sign up for that. Be one of my followers, and I will follow you in LinkedIn. You can get a lot of networking out of that down the road in your career. After this class is done, and you say, you know, I might take Mr. Hassey up on that recommendation offer, and I'm just, even though I don't need it now, I'll put it in my drawer, in my file folder, in my computer, and I'll save that for when I might need it down the road. No problem. Take advantage of that. This doesn't have to be me, this professor, but any professor. Take advantage of that. Use us as your network into the future. I enjoy that the most. I enjoy teaching, but I also enjoy staying in touch with my students. Okay, that's that. That's the paid political announcement for the night. 2 big tasks this week and next. First of all, your project paper. Have to post that by next week. But to be perfectly honest with you, if you get it to me by Sunday the 16th, I'm fine with it. Don't worry about it if you can't get it to me on Thursday, August 13th. Just get it to me by Sunday the 16th. All right? That paper. Some of you have already posted your papers, and I'll be grading those this weekend. So if you've already posted it, you'll get your grade even quicker. That's topic number 1. Topic number 2 is if you go to quizzes and examinations file folder, you'll now see your final examination. It's in 2 files, one PDF and one Word doc. You can pick either one. I lowered the percentage of this grade down to 20% of your course grade. You got a lot of work going on these last couple of weeks, so I knocked it down a little bit to just to be a little bit more fair and just to be fair. It's due Sunday at midnight, the 16th, so you have 10 days to do it. If I were you, get your paper out of the way now. Get it out of the way this weekend. And then next week, start into your exam. The exam is designed, it's multiple choice, fill in the blank, and I'll show you the exam in just a minute. It's made for you to take about an hour and a half or 2 hours. Now, some of you will probably take 3 hours, but it's made for that. It's not a marathon, all right? It's just assessing your questions on the second half of our class, accounting controls and managerial accounting, and a couple of questions about the overall class in essay format, and I'll show you those in just a minute. We have 3 review sessions, 2 review sessions officially for this work. The first one is this Saturday at 3 p.m. The link is in Blackboard. If you want to come on Saturday, maybe you took a look at the examination over the last couple days, and on Saturday, say, Mr. Hassey, explain this. Mr. Hassey, where is this? Mr. Hassey, help me on this. That review session is for that on Saturday, 3 p.m. via Zoom. If you cannot make that review session, I will be recording it. If you cannot make the review session, send me a question via email, and I'll answer that question in the review session, and it'll be recorded. Wow, Mr. Hassey, that's cool. All right. Saturday, 3 p.m. 3 to 4:30. So you don't have to come on at 3 o'clock if you don't want to. I'm going to be staring at the computer from 3 to 4:30. Yes, I have no life. I have no life, but that's okay. The next review session will be our class next Thursday night. That, remember I said last week, that's a voluntary class a week from tonight. If you want to come on board, and I'll be here, I'll be just staring at the computer again from 6 to 8 o'clock, 7:30, whatever. And if you have any last minute problems with your paper or your exam, I will be available that evening, a week from tonight, from 6 to 8 p.m. I also will record that one as well. In addition to that, we have our Tuesday afternoon class office hours, which are 3 to 5 every Tuesday. Now, I know that's a lot of people haven't been participating in that, and I understand why. You're working. That's understandable. But if any of you have some free time on that Tuesday afternoons, 3 to 5, I am available for questions then. So, but the review session on Saturday and next week's class is voluntary only if you want to come on and ask questions about that final work. Now, if you want to ask me questions about the Dodgers or the 49ers or the San Francisco Giants or the hockey playoffs, I won't answer any political questions because I'll get in trouble. You can also come on those sessions and ask me. I'd be happy to answer those. But they're mainly designed for you to review for the paper and or the examination here. Let's take a look at that examination, just roughly, briefly. It starts off with a couple of two big problems about the course. The first question is, in one page, please describe your observations of corporate accounting reporting as it relates to the 10K statement, that paper you did. What did you learn? What is confusing? Was this paper a worthwhile effort by yourself? Don't write more than a page. In one page, please describe your observations of corporate accounting reporting as it relates to the 10K statement. I want to get a little feedback from your work. Question number 2, the accounting profession. What are the responsibilities of a financial accountant? What are the responsibilities of a managerial accountant? We've talked about some of these. It's also defined in your text. What are the responsibilities of a financial accountant? What are the responsibilities of the managerial accountant? The rest of the exam has to do with problems from chapters 8, 11, 13, 18, 19, 21. Many of these you have seen before, either in quizzes or in work I have done in class. Cash reconciliation, receivables, those are multiple choice. Plant assets, this is a journal entry. Of all the questions I give in this examination, this is the one that probably some of you are going to have a difficult time on. It's reviewed in your textbook. It's about plant assets. Question 6, current liabilities. We've talked about that one. Question 7, corporate accounting and determine dividends being paid out. Question 8, managerial accounting, true or false questions. Problem 9, cost accounting, basically definition questions, multiple choice. And finally, problem 10, a break-even analysis. All of these you have seen before, either in quizzes or our class problem review. That's our last examination, 10 questions. 2 are reflection, the very first 2. Write about a half a page to a page about, sorry, I'm going to get you seasick by doing this, apologize. Are about retrospective about your paper and about the nature of our class, financial accounting and managerial accounting. And the rest are questions about the specific problems of chapters 8 through 11, 13, 18, 19, 21. That's the final. Again, 1.5, 2 hours, maybe 2.5, you can kick this out. But you got 10 days to do it. And the reason I'm giving it to you tonight, because you have a paper doing at the same time, and I know you're wrapping up work in other classes. This is not the best time of year to have an exam, the 1st of August. Your kids are probably driving you nuts from the summer. You're getting ready for school, however you're doing that in your communities. A lot going on. So let's try to make sure we can balance all these with our work and learn a little bit at the same time. That's our final. So those are your 2 big tasks these next 10 days. We have review sessions. We have many opportunities for you to get questions and get answers these last couple of weeks, these last 10 days. All right, ladies and gentlemen, thank you for turning on your cameras tonight. Jessica, what are you making?
I am juicing.
Juicing.
Yeah,
You're taking steroids?
No. It's kind of like my newest little fad thing, not really fad, but I don't eat enough vegetables, so I'm trying to get them in other ways. And then I take the pulp and put it in soup, or I put it in shakes just so I don't waste it all.
So you're pulling a fast one on your children. You're hiding things. You're lying to your children.
More or less. I mean, my son loves apple juice. I figure why not make him some from scratch? And I did the
Refresh
same
my
thing with
memory. How old was your son again?
2.5.
2.5?
Yeah.
Another year, you can slip a little wine into this cocktail. That'll be all right.
I have to wait another year?
Yeah, you got one after 3. You can't do it. All right, thanks, Jessica. All right, does anybody have any questions about what I've just discussed tonight about our material in our last 2 weeks? Now, some of you I might not see again. I might not see you in a review session on Saturday. I hope to. Some of you I might not see next week in our voluntary class on Thursday night. So if I don't see you, make sure you keep in touch with me. If you have any questions on the grading and the solutions of these last 2 materials, you be sure to let me know. Remember, if you do not get your final grade because you didn't do the course evaluation, all you'll see is all the grades in your course and you won't see your final grade. So some students think, I'll pull a fast one on HASI. I don't have to do the evaluation. I'll figure out my own grade. Well, that's going to be difficult to do unless you know the weight of the percentage that that particular grade had as part of your course grade, and you got to build that into the analysis. Now, I have a computer that does all that because my little pea brain can't figure that out. So that's why that might be difficult for you to determine that. You'll get pretty close, but it's a little bit different. Cynthia, I'm glad you could make it. You look tired. I hope you get some rest tonight. And anybody else, any questions, please? It's been an honor and a pleasure, but I'll probably talk to most of you in the next 10 days. But if I don't, you've been a great class. And I know this has been a difficult situation. I think we've gotten through it fairly well. And I applaud all of you for your hard work and your efforts. It's been a great class, and I hope to get up there down the road to teach you in real life, not real life, in person at your campus. And I think that would be a lot of fun if we could do that. Hopefully.
I have a request.
Yes, Blanca.
Knock on wood, and it'll be fine. It'll work out. Would you like to attend our graduation?
I always attend every graduation. And if you're graduating from Hancock, I will come up for that if I can work it out in my schedule. Give me advance warning and I'll do that. Now, if you graduate from Laverne, I go to every Laverne graduation, January and May. So I attend every one. Matter of fact, I shouldn't tell you this, but remember I told you earlier, I'm a geek. I keep track of these things. I will, whenever I get the graduation roster, I go through that and I pick out my students who are graduating and I send them a little note, a little email congratulating them and then telling them, I can't friggin' believe you are graduating. No way. No, I don't say that.
Yes.
So, so I will, yes, I will try to attend. And if it's at Hancock, I'll try to do that. As long as I can come up and play a little golf and do a little wine tasting, we'll be in good shape.
Okay.
So Blanca, yes, I will try to do that. Any other questions?
No. Thank you, Mr. Hasse, for putting in all the efforts that you did in this class. I really thank you because you made it easier compared to other professors.
Well, Cynthia, you don't have to say that because it's not going to help your grade one iota. So just so you know, I'm teasing. I'm teasing. It's not going to help your grade. Whatever. Forget it. No, but I appreciate that, Cynthia. That's very nice to hear.
No, I said it, no, I'm saying it like really, like I'm impressed. Just the same that Blanca's mentioned. Like I'm impressed of the way that you teach your class online because it could be very difficult. So.
Thank you. I am bad. I'm sorry. And I'm looking at I look pale. I've been playing golf every day this week. Why am I so pale? It's ridiculous. Okay. Cynthia, thank you. Those are very kind words, and I appreciate that. Seriously, I do. Thank you. And you're a fun student, a wonderful student, and don't have any more computer problems ever again.
No.
Okay.
I learned my lesson. Trust me.
Good. I'm glad. All right. Anything else?
I appreciate you too.
Jessica, go back to your kids, will you? Be a mom for once.
I only have one, kids.
Well, you need another one. You need more juicing.
I will have another kid.
Tell your husband.
Kid
Tell
as soon as we graduate.
Tell your husband to drink more of that vegetable juice. You'll have about 3 more kids.
We talked about it. Where as soon as I'm done with school, we're gonna discuss number 2.
All right. Well, I don't need to know that. Just send me the video. All right.
I don't think anyone wants to say that.
And look at Brian. On his wall is something that's very important, and I hope he abides by that in the future. Thank you, Brian. Jessica, see you later. Anybody? Thank you.
I have mine too. Here's mine.
Very nice.
Bye.
See ya. All right. Bye, everybody.
Bye.
Good night. Thank you so much.
Good night, Professor.
Bye, Michelle.
Cassie. Thank you.
Thank you, everybody. You guys have been great. Maribel, I didn't get to see you live, but you still have a very pretty picture.
I too want to say thank you so much for everything that you put in to make this a successful class. Because if you had not done this, it would have been very hard. But you have really put forth the effort to make sure that we learn, and I really appreciate that.
Thank you, Michelle. That means a lot to me. I appreciate that. Now go get an A, all right? All right. Good night. Good night, everybody.
Good night.
Good night.
We are done. Adios.
Professor Hassey?
Yes.
I just had some questions about the project paper. Like
sure.